What's up, guys? Welcome back to DCA. Today, what we're going to do is talk about Bitcoin. We're going to look at on-chain metrics in order to determine where we might be at in the market cycle and use this information in order to determine the overall health and state of the network. So, as we all know, just a few days ago at this point, Bitcoin lost about 22% in a single day, dropping from the high of the day at around 54,000 all the way down to our low of around 42,000. The reason that we're going to look at on-chain metrics is for the same reason that you would look at the financials of a company that you were investing in. You wouldn't want to be investing in a company that, was simply losing money every single quarter. This is in some ways akin to the quarterly financial results for cryptocurrency. We want to know the health and the state of the network. So by looking at simple on-chain metrics, we can get a picture of how the network is growing, if it's growing, and what we may expect. We can also look at the historical trends of on-chain metrics and identify what signs may appear when a market cycle is nearing a peak and perhaps coming to an end. We can apply this to where we're at right now and attempt to say where we may be and what may be coming forward. Okay, guys, so this is the price of Bitcoin in green. And just beneath it, we're looking at the number of active addresses on the network in orange. And just so you know, we're looking at the 7-day moving average just because if we look at the single day, it looks like that and it becomes significantly more difficult to look at. And you may say, well, why is this important? Well, think of it like this. Let's say you open a store and you have no sales, you don't buy anything. What happens to your store? It goes out of business. There's no transactions being performed. No one's buying anything, no one's selling anything, nothing's happening. So what you want is to see the number of transactions or the number of individuals transacting at your store per day to be increasing over time. And very loosely, that can be thought of as the number of active addresses on the Bitcoin network. So we want to see this number increasing over time. Okay, guys, so this is a chart that we've recently looked at. And if I could just explain it quickly, this is the price of Bitcoin on the y-axis. So as we move up, we're going higher in price, approaching $100,000. This is the number of daily active addresses on the Bitcoin network on the x-axis. Then this is color coded by the number of days elapsed. And we're starting this analysis back in about 2012. So in other words, at current time, we're sitting somewhere at around 4,000 days, and this will be in red. Whereas as you go back in time, you get into the darker blue colors, which dates essentially back to around 2012. So what this says is that in general, as the number of active addresses moves along the x-axis, in other words, increases. So currently we're sitting somewhere at around 1 million daily active addresses on the Bitcoin network compared to, say, back in 2013, which is right around this time in the lighter blue, that would be at around 100,000 active addresses. So over time, one of the primary contributors to the price of Bitcoin is the number of daily active addresses on the network. So you can see that essentially as we're increasing the number of addresses, we're moving up in time. And we have these price peaks, and then the price will fall even with adding active addresses, and then it will peak again. Okay. It will peak and then come back down as we're getting into the red. You can see there's areas of yellow here that are higher than some of the areas of orange or red. What that's saying is that's your 2017, 2018 market cycle. So when we peaked Bitcoin's price back in 2017, we were still in yellow. So we were still at around day 2,800 up to 3,000. But then as we went on, the price corrected. We came back down some in spite of adding active users. We came back down in price. down to below $10,000. Okay, down to here. We got as low as around $3,500. And then we continued up. And now you see we're sitting at around 1 million active users and our current price. So what this is telling us is that even small increases in the average number of active users can lead to a large price increase. So this is again just your number of active addresses over time. You can see that we have been increasing the average number of users over time. Now, importantly, you'll note these, seemingly small on this chart, but relatively large dips in number of users. So for instance, here we went from 1.3 million users down to around 700,000. And in 2017, we went from around 1.2 million down to around 400,000. These seemingly small changes in the number of active users are actually quite large, and these correspond with our price drops, okay? So the times that we have seen the number of active users significantly drop, these have corresponded to May of this year and of January of 2017, where we saw a bear market start for multiple years and where we saw our recent mini bear market, which led to us dropping in price from around 64,000 all the way down to 30,000. Importantly, you'll note that we have been trending up recently. These are, you can see that the days themselves are scattered all over the place, but in general, they are trending up over time, which is a good sign for the network. So this whole story brings us back to the number of active addresses on the network, which is what we're looking at here in orange, and the price in green. So you can see that in 2017, essentially we were moving up consistently. We were moving up in the number of active users. So we reached a peak right at the end of the bull market up here at around 1.2 million users daily. We reached our price peak, and then the number of users started to plummet, and you can see the price starts to plummet. Okay. Now, this is what I want to point out here. So now we're at 2018, we're moving into basically 2019 here. Notice that for a long time, the number of users on the network was locked within this range here. There were times when we'd go slightly above, times when we'd go slightly below, but in general, we were just moving sideways, staying between around 700,000 users all the way down to around 500,000 users. All right. It wasn't until right about here in April of 2019 when the users took a significant jump up, and then we went, into this newer range. We started moving into a low range of around 650,000 up to a higher range of around 800,000. But importantly, it was trending up. Then it really started to move up starting in the middle of 2020. And you saw this come to a head right around here. And if you note, if we bring the price down, we reached a peak number of active users actually in January. Okay. So we reached a peak in January, and we saw a similar thing happen back here. We reached a first peak, and then it sort of dropped down for a while. It tried to get back up, but importantly, the number of users was not able to get back to its prior level. Okay. So once we reached that peak, we came and we tried to reach that peak again, but we're not able to get there. The price kept going up. Okay. The price kept going up, but if you think about it in percentage terms, it went up barely more than 2x from here. All right. So around 25,000. So it went up maybe maybe 120% from this point. All right. Then we reached our peak, or, attempted one last try at getting back to this level right around here, for a Bitcoin price of 58,000. This is in the middle or beginning of May. We all know what happened then. The number of active users plummets. Okay, so we went from around 1.2 million all the way down to 700,000. not dissimilar to what we saw here when we went from about 1.2 million all the way down to around 700,000. But in 2018, the important point is the number of active users then plummeted again all the way down to this 500,000 level and then basically went sideways. So you'll note that during this cycle, in spite of us plummeting down to this 700,000 level, we have been trending up over time. So the active users started trending up with time after we had this correction again in July of 2019, where we started moving up starting in around December of 2019 until the COVID capitulation event. From there, we trended up with the number of active users, which led to a corresponding increase in price over time until we hit our peak in May, where we dropped the number of users from 1.2 million down to 700,000. And from there, we started going back up again, and we've been on this uptrend. Now, what we want to see is this continue. We want to get back to these higher levels. And if that can occur, the price can keep going up. Now, conversely, if we start going back down, if the number of active users on the network begins moving down and we have a correction, somewhere back into these levels, we're going to see the price drop. That's all there is to it. So the number of users on the network is directly proportional to the price movement. If we're moving upwards, then the momentum will be up. If we start moving down, at least in the short term, the price will be down. So what you'll note is that in this recent event that occurred, there was no significant swing in price. And you'll see that every time there's been a wild price either swing up or correction down, there's been a significant change in the number of active users on the network. But we did not see that here. The data we're working with we are looking at a moving average here, so that could certainly be a part of it. But even if we go and look at just the whole picture, there was no real giant swing. We've just been moving. Let's move that away. We've just been moving right along like we've expected. So kind of what this suggests to me is this could have been a liquidation hunt where exchanges or whales, for instance, could be driving the price down purposefully in order to liquidate people who are using leverage. And this is kind of why I always say you don't want to be involved with leverage because it can get you absolutely hammered. Now, I don't know exactly what drove the price down, but that's merely one possibility because we didn't see any sort of wild swing in the network like we have seen in the past to suggest that this was any sort of us reaching a top or us reaching a bottom. We've just sort of been moving very almost boringly along this upwards trend line. All right. And as far as we can tell so far, nothing dramatic has happened in terms of the health of the network. So this is something we're going to keep an eye on. It's why I said in the original video, don't panic. Let's see how it plays out. Let's see what happens. We're still sitting below the 20-week moving average, but we want to see what happens before we make any rash decisions. So it's when you start thinking emotionally, when you start acting emotionally, that it's very easy to make mistakes. So this chart is showing us the number of individuals using leverage who were long on Bitcoin in the futures market who were liquidated. And this is December the 4th when the massive price correction occurred. You can see that on that day, there were about $280 million worth of liquidated longs that, this happened as a result of that massive price correction. Okay, so this is what we say when we're talking about a liquidation hunt. It often happens in cryptocurrency where when too many people become over leveraged, someone out there or an exchange or a group of exchanges or a group of high net worth investors will drive the price down in order to liquidate these long positions. Okay. It allows them to acquire more at a cheaper price. All right. So we saw that happen on a massive scale on December 4th when $280 million were liquidated. The prior day, there were $200 million liquidated. Okay. So we've been seeing this all through November, basically. So we had almost 100 million, 135 million, 130 million, 200 million, 280 million. So these people on leverage are just getting annihilated. They're over leveraged and, you know, people are taking advantage of it. This is why it's foolish to be, using leverage like this. You can just get absolutely hammered. All right. You know, these guys know what they're doing more than you do. And when I say you, I'm talking to 99.99% of people that may be watching this. So if you think that you're going to use leverage and outsmart the guys who, have hundreds of millions, if not billions of dollars to use against you, good luck. All right. That's all I can say with that. Okay, guys. So this last thing that we're going to look at is the net inflow or outflow from exchanges. So what this means is when this number is below zero, which is the red line, when it's below zero, this indicates people are taking Bitcoin off of the exchanges and moving it into wallets, into their own personal wallets, rather than keeping it on an exchange. When it's above zero, this means people are putting it onto exchanges. And this can be thought of in its most simple terms as when you're putting Bitcoin on an exchange, you're putting it there to sell it in general. Now, you can note that we basically all through 2020, other than a short time here in August and a short time here in essentially April and May, the market has been in general pulling Bitcoin off of exchanges in order to put in wallets off of exchanges in order to save, to hodl. When we've seen it go significantly above, so people putting it onto exchanges, this is to sell. And you can see that people were basically getting out of the market because they had made massive profits starting in April. You saw this in the middle of April. Once we got up to 64K, it started coming onto markets. Now, recently, since the end of November, we have seen a trend this way, but we see this all the time. It's basically once it goes significantly above, then you can be more worried about perhaps the market cycle is coming to an end. All right. So this isn't a perfect measure of, what's going on in the market, but these are basically ways that you can start to build a framework for looking at what's going on with the Bitcoin network. These may not be the most advanced on-chain metrics, but what we're trying to do is introduce these metrics in some of their more basic forms so that we can start to build a framework for assessing this information going forward. Like we've said, Bitcoin sitting at around 49,000 below its 20-week moving average. The on-chain data, basically what it's saying is we want to be able to react to this information that we've seen of us moving below the 20-week moving average, but we don't want to only consider that. We want to take other factors into consideration, which is what the on-chain metrics are helping us to do. So overall, we're sort of at a decisive point. We're below this key price metric, but a lot of the on-chain metrics are still signaling strength in the market. So we just need to closely watch. I'll be keeping you updated on this information. If anything significantly changes, I'll let you know about it right away. And, with that said, that's going to be it for this one, guys. If If you like this type of content, hit like and subscribe. And until next time, as usual, see you.